Yeah, I'm sure a lot of things have happened during the week that caught your attention. A lot has also happened that both global events that happen and also have an effect on local events. We're looking at, if you look at events that happened last week, you have to look at the shock of the 16th largest bank in America, Silicon Valley Bank, that went under, and also Signature Bank, also in New York, that went under. And that sent panic wave all over the world, especially global markets. And when global markets sneeze, every other market in the world sneezes. And at that time, a lot of people were saying, wow, how will it affect businesses? How will it affect other banks, especially the larger bank in the world, and also coming to Africa and coming to Nigeria. Silicon Valley Bank is a bank that was mainly a specialized bank for startup and also tech companies. That was basically what Silicon Valley Bank was all about. And so what they do is that most of the tech company gives them their funds. They also help in starting up companies. And so what they do is that they invest some of this money into government bonds, especially United States Treasury bonds that takes for like 4 years, 5 years. Some of them invest as large as 10 years. A lot of tech giants, Facebook, that's Meta, the parents company of Facebook, you have Amazon, you have Google, all of them are involved in downsizing. And so a lot of businesses in the tech space is not really what it used to be. So they were downsizing, and also they needed to pay some of the employee that they were downsizing their benefits. So they had to call back to their deposit and money in the Silicon Bank. And so the Silicon Bank tried to also see how they can sell some of their investment, and they looked at the long government treasury bond. And because of the hike in interest rate, the value of the treasury bonds, government security, especially the treasury bond, came down. And so they needed to sell at that loss, and were trying to offset some of their assets also. At that point, the US government intervened. And so we saw what we've been seeing as regards Silicon Valley Bank. And again, because investors heard about that, all of them, not just investors, investors heard about it, sent panic in the system. Customers also wanted to collect their money, fear that they will lose their money, because in the United States, if you have above $250,000, you are not able to recover it, even if the bank goes under, because it's only $250,000 as minimum, maximum that the government can be able to pay. It depends on the amount you have in the bank. And so this will involve a lot of companies. But the US government, because of the value of that bank, especially in terms of startup and in terms of tech companies and what they've brought to the US economy, the US government intervened and said every money that is there for customers, they will get the exact money that were put in there. And so that caused a little bit, brought a little bit sanity. But again, for investors were scared of what was happening in the Silicon Valley Bank, and they saw that, oh, that could also play out in some of the equities that are that have dealing with the Silicon Valley Bank, and also some of the startup. And you saw the panic that went through the global market, especially in America and Asia. Now, we'll talk about the Signature Bank. Signature Bank is purely for traders that trade on crypto. And so you know the challenge with crypto. It has been going up and down. It has been very volatile. They also could not meet demand, and so that bank went under. Again, the United States government intervened, and the panic was not much, but it will also send a shockwave around the market. So we saw Asian stock market go down. We saw the United States market go down. We saw the London Stock Exchange also suffer a little bit of going down. But for the London Stock Exchange, you should know that the Silicon Valley Bank also is also in London. And immediately the regulators of, that is the Bank of England, intervened, and HSBC bought up Silicon Valley immediately for £1. You know, and he said £1. And they have just 3,000 customers, so they needed to not to cause that systematic crisis. And when we thought we were recovering from that, then we had the Credit Suisse, also one of the biggest banks in Switzerland, also came with its own crisis. And again, it sent shock waves around the market in Europe, especially. And the government intervene and say Credit Suisse is not really, it's a strong bank, and if there's any issue, they will also intervene, and they definitely intervene. And the largest investors in Credit Suisse, which happens to be the Saudi investment company that is through the Saudi government, said they were not going to pump in more liquidity into that bank. And we saw the crisis that caused panic wave. But at the end of the day, Credit Suisse is involved in a takeover talk with one of Sweden's biggest banks. So those are major events that happened in the world last week. And when this event happened, it sent shockwave all around, and it caught to Africa. And then we saw the Nigerian Stock Exchange, the South African Johannesburg Stock Exchange, the Kenya also Stock Exchange now falling drastically. And a lot of people were like, oh, there must have been one or two banks in Nigeria or in Kenya, in South Africa that was doing business with, especially the Silicon Valley Bank. Well, fortunately, like I said, fortunately, most Nigerian banks were not involved in any dealings with these banks, though you have what we call a signature bank in Abuja, but it stands on its own and it's a new bank, and it was not listed on the exchange, and it doesn't have so much customers. So we saw those panic wave, and then we saw it come through to our market. We saw the banking stock going down to a low, almost 6 weeks low at that time. Investors were panicked, thinking that what we had in 2008 is about to happen again, and also what we had in 2020 as the pandemic was also to affect the stock market. But then it gave an opportunity. When you look at Nigerian banks, or a bank, especially Nigerian banks, the liquidity ratio of those banks are still very, very strong. They had no dealings with those two banks, especially the Signature Bank and the Silicon Valley Bank. Neither do they have any dealing with Credit Suisse in Switzerland. Silicon Valley Bank was a one-shop bank, whereby it strictly had its business with tech companies, startups. Signature Bank was a one-shop bank, also have its own business with cryptocurrency traders. But when you look at Nigerian Bank has become a holding bank. So they don't just involve in one business. When I mean holding bank, the banks are now a subsidiary of a holding companies. So what impact does that have to the bank? That means you cannot have, like Nigerian banks now, they have the insurance company, they have the payment company, they have the real estate company, they have the investment company, they have the fixed income companies. They have a lot of companies that are involved in a lot of things now under a holding company. So that is not just a one-shop bank. It's a shop that is comprised of all goods and services. So that is why I said Nigerian banks will not suffer the way we saw those banks suffer, because of our diversification, especially in the Nigerian banking space. So there's a lot of liquidity in the system. And so we saw the market come. What happened again was what we call market panic. Remember some time ago when we talk about the market panic, something happened somewhere that does not even have correlation with what, so the market can. Remember the 9/11 that happened in the US, all market in the world panic. So the same thing I think happened when we had the issue with Silicon Valley and Signature Bank. Now, what does that create? That creates an opportunities for Nigerian investors, especially investors that are investing in the equity market. Like I said, a bank like Zenith Bank came down, GTCO came down, Access Bank came down, UBA came down. A lot of financial banks came down because people were scared, and also coupled with the issue that we have had in terms of cash shortage. Also, people are thinking that it will affect the bottom line. Now, what happened in America has no effect on Nigerian bank, but it affected Nigerian bank. So it has created an opportunity for investors. If I were in your shoe, I'll be looking at those stocks of those banks that were going down. A bank like Zenith Bank went down, GT Bank, which is called GTCO, like I said, it's a holding company, went down. Access Bank also went down. We saw UB also going down. Almost all the big banks, even First Bank, ETI, Stanbic, IBTC, all the big banks were going down because of what happened in the US that has no effect on them. But we call that market panic. In market panic, it creates an opportunity for shrewd investors to buy into good stocks, and through that stock you'll be able to build wealth and create and also earn dividend. Now, for these Nigerian banks, remember that this is their dividend paying time. Some of these banks went down, and so you have created an opportunity for you to buy and also enjoy dividend yield of over 10% in each of these banks. So it was an opportunity. And I think if you have not taken that opportunity, it's a time to also look at it and see how you can take advantage of the opportunity. People said, oh, the cashless policy, how has it affected the bank? Has it affected them positive in terms of image, in terms of the image of the bank, the perception of Nigerians to the bank? It has affected them negatively because people felt the banks were not being responsible enough, even if the banks were not the one to print currency. I mean, it was supposed to be printed by the CBN. But again, people felt that the banks were not doing so much to give their customer. They have a negative perception. But when it comes to the bottom line of the bank, it will definitely improve the bottom line of the bank in terms of the profit that this bank will earn from cashless policy, because a lot of transactions, there were banks before that we got transaction, maybe we do transaction of 20 million Nigerians, but we saw transaction move up to about 80 million, and on each of these transactions there's a fee that is accrued to the bank. So it has created more revenue for the banks, and not just the bank. I remember these days every transaction you do, you have to pay for value added tax. That also have created revenue for the government. So how can you be creating revenue for the bank, income for the bank, income for government, and you're not looking at also taking an opportunity to create another stream of incomes? It's a good time for you to look at MTN shares. To also, Airtel Africa also have that license to become a money agent. Not just money agent, they are super money agent. Because of their wider coverage, they can operate in any part of Nigeria, and this operation does not come for free. They also earn fees on that, and that's what will impact their bottom line. So this current situation of cashless policy has created an opportunity also for shrewd Nigerians that want to invest in companies that are going to be the drivers of this cashless policy. And I have told you, first of all, you look at the banking space, and also you look at the telecommunication space. So my advice for you, check these two spaces, begin to invest, and see how you grow your wealth in the short and in the long term.